Crazy week in the market. Crazy. Man, so what's up, y'all? My name is Kaon. I've been investing and trading for about 4 or 5 years now, and I finally feel like I'm at the point where I got enough experience and insight to kind of relay that to y'all and kind of give you guys a little help and, you know, um, perspective on like why things are happening in the market and just potentially where we might be going from here. So, yeah, in this channel, we're going to dive a lot into the technicals in the market, which means we're going to look at a lot of charts. We'll be looking at individual stock charts, and of course, we'll be looking at charts of a lot of the main ETFs and indexes to kind of see where the market's moving and kind of do some recap of also what we've been going through for the past week or two when it comes to this whole tariff situation. So stay tuned. I appreciate y'all being here for my first video. I'm going to be doing these weekly, and I appreciate y'all coming along on the journey with me. So let's get into it. All right, y'all. So what I have on my screen here is the SPX 5-year weekly chart. And the SPX is just the index that tracks the top 500 companies in the U.S. stock market. So when you get a sense of where the market is at, you want to look at these indexes that track a lot of the companies to kind of give you a broader picture of what exactly is going on. So as most of us know, over this past few weeks, the market's been crazy with all this Trump craziness, all the tariffs, all the unpredictability that's come with him as president. So we've seen a huge sell-off. I think over probably like the last month and a half, we went from all-time highs down to bear markets, which is a negative 20% declines within a month and a half span. So when we fall that fast and that hard, what you want to do is look for key levels where we might bounce. And this is where you kind of set yourself up for big moves in the market. And what you need to just basically do is trust what you see on these charts and execute. So some of the stock moves that we see in the stock market, well, let me say all of the stock moves that we see on the stock market are either driven by technicals exclusively, fundamentals exclusively, or a mix of both. Fundamentals are basically what's going on in the economy, news, earning reports, and those things could happen, haphazardly and spontaneously, and sometimes they're out of our control. But when it comes to technicals, we have set data on these charts that kind of give us insight into where we might see some reversals in price action or where we might see continuations of sell-offs and stuff like that. So when it came to this hard drop, in my mind, what I'm thinking is we're not going to drop forever, and the sentiment in the market is so bad that any spark of good news is going to send us running crazy. So my job as a trader is to find where are these key levels where we might bounce from, and how can I benefit or execute or put myself in a position to benefit from these situations. So like I said, this is XPX on my chart, and I'm just going to kind of get into how I was able to make some pretty decent money this last week by looking at this chart and finding where it might be a potential bounce point. So first thing I see here is you want to mark off your key levels. So as we can see, we have an all-time high for SPX of 6147.43. So I'm just going to go ahead and mark that off. And this is stuff that I already have marked off on my chart before going into a trading day. I just cleared my chart off so I can kind of walk you guys through the steps of exactly what I do to get prepared for certain situations. So like I said, all-time high is 6147.43. And then as I look back, like I said, this is a 5-year weekly chart. So each one of these candles is 1 week. I just want to mark off key levels. So what I see here is this 2021 high right here, which ended up being very important and intriguing to me. So we see after our COVID debacle that we had a crazy run up all of 2020 and 2021. And then we kind of top off here around like 4,800. So what I want to do there is mark off that level 4,800. And as you see, as I draw that line, it just so happened that if I zoom back into this last week we basically bounced right off that 4,800 level. Seeing something bounce off a key level like this or seeing something approach a key level like this just based off price action. When I say based off price action, we have a support here at 4,800 just based off this 2021 high that we got to, and then we reject down and we don't get back to it until like, let's see, 2024. So that's a key level. And that's just a support that I see at price action. As traders, what we want to do though is we basically want to, there's different indicators in the market that tell traders there's higher probabilities of things to happen. So this support alone here is a good sign for a bounce. But what we want to do is we want to look at other indicators that might strengthen that bias that we have and add to our conviction when it comes to placing a trade in the opposite direction or a reversal. So that's a strong level right there from our 2021 high based off price action. But another thing that a lot of traders use is something called Fibonacci retracements. What that is basically you're taking the all-time high of the stock and the all-time low of the stock, and it gives you retracement levels that may be important levels depending on the high and the low. So what I'm going to do now is I'm going to draw that so you guys can kind of see and I can walk you through exactly what I mean. So what I'm going to do is I'm going to go zoom out and go to a super far out chart, and I'm going to mark out this all-time high, which is 614743, and then I'm going to find the all-time low of SPX. So I'm going to have to zoom all the way back, and it's 4.4. So I'm going to mark that, and then sometimes with these charts, it doesn't let you mark to the exact cent. So we're going to go and edit this to the proper values that we need. So that bottom value is 4.40. And then our all-time high is 614743. Okay. And what this gives me is a retracement level of 78.6% retracement, 61.8% retracement, 50% retracement, and so on and so forth. And this is just another indicator that traders use to kind of find good levels that might suggest a higher probability of a bounce. So what do we see here? We have that 2021 high right here that we marked off. And then look at these red lines. That's my Fibonacci retracements. It just so happens that our 78.6 retracement level lines up almost perfectly with that 2021 high that we now just retested this last week. So something you kind of need to understand is different traders use different indicators in the market. So there's traders that use price actions that form supports and resistances. There's traders that use Fibonacci, and based off each one of these indicators, we have different traders that enter trades because they're getting insight from the type of strategy that they have. And this kind of takes us into something called areas of confluence. An area of confluence is an area or a level where basically different indicators are lined up to strengthen a bias or to strengthen the probability that a certain move might happen. So right now we have a support level that was formed off price action from our 2021 high. And now we have our 78.6% retracement level lined up perfectly, giving us some stronger feelings or some stronger reassurance that we might see a potential bounce here. Now that's two things that have lined up. That's great. But let's see if we have anything else. Now what I'm going to do is I am going to open up some of my moving averages. So moving averages are very popular indicators that a lot of traders use, and we're just going to kind of take a look at some things. Would you look at this? I'm back on my weekly chart, and this dotted green line here that you guys see at the bottom, look where it is. It just so happens to be basically lined up with our 2021 high of 4,800 with our 78.6% Fibonacci retracement level, and now we have the 200 EMA on our weekly chart basically all lined up right here. When I see this is like heaven for traders. a lot of people missed this move because they weren't prepared and they weren't zoomed out far enough. So a lot of, especially day traders, a lot of day traders, they're looking at pre-market price action, which is the price action that happens before the market opens, or they're looking at maybe data from just that week. But what we always want to do is we want to zoom out on these charts and we want to mark off key levels that go back 3, 5, 10 years even. So a lot of traders might have missed this because they weren't even aware that we were coming up on this 2021 high. So let's get back into what exactly I'm seeing. I have that 2021 high support. I have that Fibonacci retracement of 78.6 level. And now I have this 200 EMA lined up basically perfectly. And when I see that, especially after the crazy fall that we seen from all this Trump craziness, in my mind, I'm like, it's go time. It's money time. We fell crazy. We fell 20% in a month and a half. That's some unheard of crazy type shit. So when I see a move down like that, and then we finally hit a key level, in my mind, I'm like, calls. When I say calls, I'm talking about options. So this was money time for sure. And another thing, another kind of understanding that you have to have in the market is where are the buyers at and where are the sellers at. So when I see that we have three areas of confluence, or when I see that we have a strong area of confluence with three different indicators lined up, in my mind, I'm like, we have a lot of buyers at this level. So if we drop down to this level, there's a lot of buy orders that are just waiting to be triggered, and that should send us in the opposite direction. So at first, I noticed these three, and in my mind, that's enough for me. I see three strong indicators lining up like this in my mind. I'm like, oh yeah, it's go time. But that's not even it. That's not even all we had here, folks. Look at this. So that's not even all we had. Also, trend lines. Like, what's the trend? What is where is price action bouncing at certain places? So look, we have this bottom here, 2022 bottom. The low on this is like 3,500. So I'll mark that, and then I'm just gonna draw. You see this low here, and one thing that we know is third bounces are high probabilities of reversal. So I'm gonna draw this here. Look at this. Look at this. Now it don't line up exactly perfectly. It don't line up exactly perfect, but it's valid. So we have that 2021 level. We have that 2021 high asking that support. We have our Fibonacci retracement level. We have our 200 EMA on the weekly chart that's just slight below those two. And now we have a trend line on the third touch that are basically all lined up or within what $100 on XPX, which is a small range. We're right at this point we're at 4,800. So a $100 range on a $4,800 XPX is a small range. So I see these four things line up, and in my mind I'm like, we about to bounce crazy. And something I will say is like a lot of times in the market, or sometimes in the market, it's interesting how technicals can line up with fundamental news. So we dropped super hard because of these tariffs. Trump put all the crazy tariffs on China, India, blah, 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 all these things, and that's why we were falling crazy. And it just so happened that, like, as soon as we got to this level, we got news that he was, in talks with the European Union to kind of modify some of these tariffs. So it's just kind of interesting in the market how sometimes these fundamentals align with technicals, and then we get good news lined up with the strong bounce point in the market, and that's where you see price action go crazy. So yeah, this is XPX. If you were prepared for this move and you had your main key levels marked off from within the last 5 years, you knew that we was coming up on this 2021 high with this 78.6 retracement level, with this third touch of a trend line, with this 200 EMA on the weekly all lined up, and you was ready to go. And one thing that's very important as traders is, yes, we have systems, and yes, we have rules that we must abide by. So just for example, let's say you have $10,000 in a trading account, and it's part of your strategy that you only use 20% of that for a trade. So you're using $2,000 per trade, and you're looking for a certain return. But what we must understand is when certain opportunities present themselves, you must capitalize. And when certain opportunities with high conviction present themselves, you must go bigger in size. Don't don't go bigger in size over emotion and you feel like you want to make a lot of money today. Go bigger in size when your strategy and your indicators tell you that there's a higher probability than normal that what you think will happen is going to happen. That is when you up your size and you really make this money. Now for me, I upped my size on this trade, but now that it's happened, I'm like, damn, I should have cashed out. It went way higher. But you got to be happy with your win. So I saw this, I upped my size. I was able to make more money than I would have made on a normal trade, and I'm happy with that. But yeah, so this is XPX, and this is kind of some of the things that we just saw last week. So Monday we went crazy because we hit this very, very key level, and then yeah, so we just gotta kind of be prepared for like instances like this. Now what I'm gonna kind of do, I'm gonna get into some individual stock charts, and we're just gonna kind of see if we had anything else line up like we did in the market. Another thing, sometimes you'll be looking at individual stock charts and it'll look like it's primed for a bounce. What you always want to do is you want to make sure, just to strengthen your conviction, that the market confirms your bias or confirms your technical analysis of an individual stock. So for example, if I'm looking at Apple stock and it's coming up on a key support level, but the market just lost one of its key support levels, as in it fell below one of the key support levels and it looks like it's going lower, that might be a sign that the level for Apple might fall through as well too. But when we see that a major index like XPX is at a major support level, also with an individual stock that you look like, which a lot of times you'll notice it will because this index is just tracking a big group of stocks, so a lot of times they line up like that. That is the confirmation that we need. So when I see XPX here at this low, of course you could just trade the index itself, but we can also trade individual stocks. So let's take a look at Palantir right now. So Palantir stock. I'm going to clear this chart, and I'm going to kind of do the same thing I just did with y'all for XPX. Clear that. Clear that. Get rid of the fib. Cool. So this is Palantir. And we're going to kind of mark off some key levels real quick. All-time high, 25.41. There. Then we see, I already got this circle here. This low right here at around like 63.25. There. And then this looks like a key level, and then that too. Marking off some levels. All right, so we got key levels. You see here, this is Monday. We gap down here, and then we end up bouncing up. So it's very close to this key level here. This our January early of the year low. It's very close to getting there, but let's just kind of see if we got anything else to kind of give us more conviction that would have been a good place to buy. So this low right here, that was hitting when XPX was hitting that support level as well too. If you see XPX hit a major key level like I just described like that, and it's gonna bring the whole market with it. So let's take a look. Let's draw the fib levels for this as well too. So we have Palantir all-time high of 125.41. Draw down to the low, which is 584. There's our levels. We're going to edit that just to get these values completely correct. 584. And now we have our fib levels. Let's take a look. What is it looking like? Would you look at that? Would you look at that? So we have that support low right here where this little purple This little purple circle I have here, that was our yearly low, 2025 low. And then look, we're right here sitting at our 50% retracement. When we opened on Monday the 7th, we opened at our 50% retracement. So that means that from all-time high to all-time low, the middle price is at 50% level, which is a key level. And then now look what we see here. We see that it's very close to our yearly low, acting as support as well too. So if you was watching Palantir and you saw that we opened at this 50% retracement level, as well as very close to our yearly low, as well as if you were watching XPX too. And look, you always want to have more than one chart on your screen. Look, here's XPX, so we can watch more than one thing at a time. So as I'm watching XPX, the market drop down to that area confluence where I have 4 indicators basically all lined up, and then I'm looking at Palantir where it's at this key support level along with the 50% retracement. In my mind, I'm like, oh, it's go time. Palantir ready to go. But look, let's take a look. Let's see if there's anything else that lines up with this. So I'm gonna open up my moving averages again, and this is the daily chart. Would you look at this? Dotted green line, that's the 200 EMA. The 200 EMA is basically like the main moving average that a lot of, economists and traders look at. It's a very simple, like, oh, if we're above the 200 EMA, it's a good sign. If we're below, it's a bad sign. Very simple way to kind of put it. But when we retest these EMA levels, these 200 EMA levels, which is a key EMA, it's important to kind of see how price action reacts there. So we have this 50% retracement level. We have this January 2025 low, which is our low on the year for the stock. And then we have our 200 EMA on the daily all lined up. That's money time, especially after a crazy sell-off. It went from 125 down to $65, $66. Crazy. And how long? Its all-time high was February 19th. This was the beginning of April, y'all. It's the beginning of April. So in a month and a half, this shit dropped 50%. And one thing you do want to keep in mind is, how's the company doing? Like, is this a good company? Like, if something dropped that fast and it was a bad company, I'm not even looking at it because it might not rebound, But when you see good companies that sell off this quick and this drastically, you want to take advantage and you want to be aggressive with your buying. When fear in the market is the highest is when the real money is made from the real people that really do this. Anytime the stock market has hit depression, recession, crash, sold off, back in 87, the market sold off over 20% in one day. Anytime anything crazy in the market has ever happened, we always recover to all-time highs. There's never been a time where the market didn't recover back to an all-time high. And to assume that this time may be different, it's just not historically smart to do that. So as investors, we always thinking, when I get these discounts, I need to take advantage. And how far of a drawdown might I see? How much of a discount might I get on these good companies? And when I do get to certain levels, am I going to have the discipline to execute and buy these companies at levels like this? So I see the 50% retracement. We have the support based on this price action back from January 2025, and then we have the 200 EMA all lined up. All while SPX is hitting this key area of confluence that's giving us a very high indication that we're going to reverse and bounce. So XPX, you could have banked off of. Palantir, you could have made some dough off of when you see that. And then another stock I want to look at is CrowdStrike. CrowdStrike's like one of the major cybersecurity companies in the U.S. right now, in the U.S. stock market right now. So, like I said, what I'm doing is looking for good companies, great companies that are growing and have growth potential for the future, and I'm looking for them in big drawdowns to take advantage of these things and look for a bounce back up to the upside. So CrowdStrike, I'm gonna do the same thing. You guys are learning to draw fibs today. It's easy. You just find all-time highs and all-time lows. So for CrowdStrike, we got an all-time high of 55, 59, 455.59. So we're gonna draw that, and the all-time low is 31.95. There's that like that. We're just gonna edit these values. 55, 59, 9, and then what's this one? 31.95. There's that. And then we just gonna draw some key levels out. So we got our all-time high. We're just gonna draw that. We got a key level here, it looks like. And then look, 2021 high again. Right here. Look at this. I swear, sometimes this shit just too easy. Have good recognition skills, and then have the discipline to execute when it reaches a level that you know is a strong level. Most traders' thing is a mental game. It ain't that hard to draw a Fibonacci retracement from all-time high to all-time low. It ain't that hard to identify a key level in support or resistance based off price action movement. It ain't that hard to look at a chart and kind of be like, oh, this is a place where the price usually sells off. Oh, this is a place where the price usually goes up. That's not the hard part of trading. The hard part of trading is when there's fear in the market or when there's greed in the market, when you see indicators tell you something, do you have the discipline to trust your system and execute on that? That's the hard part of trading. It's the mental thing. The physical, technical analysis, that's the easy part. It's when you see these companies get to levels that have strong potential for reversal, even when the world is going crazy and all this tariff news is scaring everybody and people are pulling money out the market, is do you have the discipline to execute on the plan that you put in place months, days, weeks ago? So, CrowdStrike here. We have that 2021 high. Let me show y'all again. 5-year weekly chart right here. 2021 high of like around what, $295, $300. We have, and then we drew our Fibonacci retracement from all-time high to all-time low. What happens to line up? That $300 level lines up basically exactly with our 61.8% retracement level. And these retracement levels are just the stock or default retracement levels that they give you. I ain't mess with them. So it's 78.6, 61.8, 50, 38.2, 23.6, and then 0, which is all-time low. So this, all you got to do is draw and it pops up. So we have that 2021 high lined up with that 61.8 retracement level. And then I believe there was something else here too. A big thing, like I said before, areas of confluence. We have that support that formed off of the 2021 price action. And now we have this Fibonacci level that's lined up. That's good. I swear there was something else I saw too. Let's see. Alright, maybe it's just those two. But like I said, if you was watching CrowdStrike, you see what happens with XPX. You see CrowdStrike's at a good level where you see a couple indicators lining up. Money time. Just got to be disciplined and execute. Yeah, I swear I seen something else with CrowdStrike. Like there was like a third. There was something else that was getting me excited with CrowdStrike. Maybe that was it. I don't even know. We'll see. Yeah, nah. Anyway, yeah, guys. So we saw a crazy bounce in the stock market last week, and Part of it was technical. Like I said, XPX hit a very key level of that 2021 high. Like I said, XPX is the 500 biggest companies in the stock market index for it. When that hits key levels, usually it's a good sign of a reversal. We had some news that helped in that kind of volume, moving us back up to the upside. Trump ended up pausing tariffs for 90 days on all countries except China. So basically, we had the idea in our mind going into this week that all countries was getting tariffs, and while that's still in play, Trump ended up pausing it for 90 days. And like I said, we sold off crazy. We went from all-time highs to a bear market, which is a negative 20% regression, all within like a month and a half, 2 months. That's a crazy move in the market. For the whole entire stock market to lose 20% in a month and a half is absurd. So in my mind, I'm thinking any level of good news is gonna send us running crazy. And then when you match good news with strong technical levels that suggest reversals, money time. So where do we go from here? Let's kind of get into that a little bit. So we just got news today. Saturday, we just got news today. It's April 12th. So Saturday morning, Trump released news that all he basically released exceptions to the tariffs. Certain companies and certain sectors of the economy that would have exceptions to these tariffs. So all chip stocks, which is all semiconductors, and basically what he said was all of our major tech companies, all of our AI, semiconductor chip stocks, iPhone, Apple, will be exempt from the tariffs. So basically, he realized that putting tariffs on everything that we basically get from China would be a great detriment to our economy. iPhones would have went from $1,500 to $5,000 if we had to manufacture them somewhere other than China. Something crazy. It's not fathomable. It don't make sense. And in my mind, I'm thinking Trump is so unpredictable, so rash, so arrogant that his dumb ass might not even care about none of that. But we got news today that he got a little bit of sense, and he kind of realized that he needed to kind of put some exemptions on some of the tariffs. So we got good news today about stocks like Nvidia, who is a major chip player in our space right now. Apple, which is the major iPhone player. All these companies are going to be exempt from these tariffs. So I say that to say, where do we go from here? On Monday, we're going to probably see a huge gap up. Apple will be up huge. Nvidia will be up huge. TSM will probably be up huge. ASML. Apple for sure. And what do we know about these major companies? They move the market. So if Nvidia going up crazy, Apple going up crazy, what's the market gonna do? The market gonna follow. So where do we go from here? At least in the short term, Monday we gonna be up big probably, just because we got this good news about these tariff exemptions. So we're just gonna watch the stocks that got the good news. So they're gonna open up big. So what do we want to do? If we're not already in calls, we want to wait for pullbacks, 2 entries to the upside. So on Monday, I'll be looking at Apple. I'll be looking at Nvidia. I'll be looking at AMD, which is beat down crazy. AMD's beat down so crazy. Like any type of good news that we get, AMD's gonna run crazy. So I already did my Fibonacci retracement on this. All-time high AMD 2273, and then from the low, we still at the 38.2 retracement level. We just above it. So AMD's still 50% down. AMD's still 60% down from its all-time high. So that's gonna be up crazy. That'll probably be one of my main watches: AMD, Nvidia, Apple, and then like I said, the rest of the market moves with those big companies. So we got some good news. We just gonna kind of see where things open on Monday, and we're gonna look for pullbacks. We don't wanna just buy blindly like, oh, we got good news, we buying. We probably open up, run, and then you want to wait for pullbacks, things that make sense for your strategy, But so yeah, the market, it's a beautiful trade market. Like I said, you could trade to the downside too. We went down crazy. We lost 20% in the market, like I said, in a month and a half. So if you was in puts, you made bank, and volatility is higher when the market's going down. So you actually make more money when the stocks are going down, when the market's going down, than you do when they're going up. In general, when price action is going up in the stock market, volatility goes down, and volatility is baked into contract prices. So these option contracts that we trade, when your stock is going up, the volatility is actually going down. You're still making money because you're in the right side of the trade. You're predicting that stock prices will go up, and they're going up. So the delta of those contracts are going up, so you're making money. But when you have things going down, volatility is going up, so that increases contract prices. So contract prices actually move quicker when stocks go down, so we can actually make more money when the stocks fall. But like I said, it's looking like we bouncing in the short term. Trump unpredictable. We just gonna monitor the situation. We can get some more bad news and we fall back down again. But this is a beautiful trade market. We seeing 20 to $30 moves on SPY and QQQ like daily. Like that's unheard of. That's crazy type shit. Like if you can capture a $10 move on SPY, like you up. And if this is the market, this is another thing I want to touch on. This is the market where you trust your big targets. When I say that, it's like if we like SPY hit 510 and the next real key like resistance level that I saw was 525. That's a $15 spread. A lot of us have these systems where we like, okay, once I make 25%, I take profit, or once I make 30%, I'll take profit, and that's cool. Stick to your system. Don't change your system. But in markets like this, I was talking about going bigger in size. So what I've been doing is my system usually is once I hit 30%, I'm trimming 50% of the position, and then I'm holding the other 50% to higher targets or higher resistance levels that the stock might get to. In this market, I'm going bigger in size. So instead of buying 2 contracts, I might buy 4. I cut one at 30%, one at 50%, one at 75%, and then I'm leaving one runner. Like, go get my big target. So when SPY went from 510, and so I 4 contracts at 510, trimmed 25%, 50%, 75%, and at this point in time, SPY was still at what 515, 517, and my big target is 525. And you just kind of have to know the market conditions we're in. When we're seeing $20 to $30 swings in a day consistently for a week, 2 weeks straight, it's a higher conviction that these bigger targets will hit for you, and this is where the real money's made. So stick to your system, take profits at the levels you usually do, but up your size with when the conviction is there, when you're very confident about a trade and very confident about a level that we might see a reversal or a continuation on. Hold those runners. You want to maximize the gains in this market, but also be cautious because things change very quickly. But we also have these levels that we've been hitting, and this is where money's made. Times like this is life-changing money being made right now. So we want to trust our bigger targets, but we also want to stay true to our systems, and we want to stay disciplined. So, like I said, this next week in the market should be a good one. We got some good news this Saturday morning. If nothing changes, if we don't get no nonsense news from Trump or anything in the administration, it looks like the market gonna be up Monday. With good news that we have stocks like Apple, Nvidia being exempt from these tariffs, we should open up pretty big Monday. Depending on how big, you kind of want to tailor expectations for more upside. If we open up 5%, it's like, okay, a lot of those gains were already captured pre-market. We don't want to chase nothing, but we're going to monitor what the stock market's looking like pre-market Monday, and we'll kind of just go from there. But yeah, crazy week in the market. I hope everybody made some money. If you're not making money, don't feel bad. If you're watching this video and you ain't make no money last week, just know that there's still more opportunities to come. There's always another opportunity. You kind of have to have like some checks and balances within yourself in this game. Like a lot of times we beat ourselves up and our mood gets affected because we feel like we either should have made more money than we did. We either didn't make any money and we see everybody online making money. We either missed out on money that we feel like we should have made more, or we didn't make no money at all. Now we have FOMO because now we feel like we're missing out and everybody making money. But you just got to keep yourself in check, have some checks and balances, some discipline within yourself to know like There's always another trading day. There's always another move. There's always something else going on, and you just next time put yourself in a position to capitalize and execute on kind of these things that we've seen in the market. So I appreciate y'all. Like I said, I'll be doing these at least once a week. I'll just kind of let the market dictate how much I do these, and yeah, I'll drop videos on individual stocks. I'll drop videos on different indicators. I'll drop videos on things just kind of as I feel, and like as things kind of pop up to me, I'll kind of release content and kind of give y'all some of my insight. But yeah, I hope y'all enjoyed the video. Any questions you have, go ahead, send me a comment. Please like this video, give me a follow, a subscription, that'd be great. And yeah, we're just gonna keep at it, y'all. Let's get this money. It's a great trade market. Throughout all the fear, all these up and down swings we're seeing, it's a great time to be a trader if we discipline and we stick to our systems and we understand what's going on. So yeah, let's get it, y'all. Stay tuned. I'll be back with more, and I hope y'all enjoy. Stay locked in with me, okay? Appreciate y'all.